The Kansas City housing market just shifted. For the first time since 2020, buyers have their power back, and those brutal bidding wars, they're done. But the truth is, you've only got a short window to act on this shift, because right now, most people still have no idea it's even going on. Hey guys, it's Kelsea with Keller Williams Kansas City North, and I'm about to show you exactly how to make the most of this moment. Finally, Kansas City has more homes for sale after years of shortage. And what does that mean if you're buying or selling right now? The numbers point to new opportunities. For 5 years, everyone kept saying there's nothing on the market, but that just changed. And the data tells a completely different story than what we've lived through since 2020. Total inventory hit over 8,000 homes in July. That's up 10% from last year, the biggest jump we've seen since the pandemic. In simple terms, we've gone from having no real choices to having real options again. Months of supply climbed to nearly 3, about 8% higher than last year. That's still a seller's market since the balanced market takes about 4 to 6 months of supply, but for the first time in years, we're moving closer to that balance. And when you step back, it's more than just extra homes on the market. It's the start of a bigger market shift. It's about to get supercharged by 3 major infrastructure projects. We'll cover those later, but one stands out: the billion-dollar KCI Airport project. That development is already reshaping the North End. So what do these numbers actually mean? Most of this year's growth is from resale homes and existing listings. New construction has stayed flat. That tells us that homeowners are finally willing to sell and move. And what's driving it is the rate lock-in effect starting to fade. Remember when people with 3% mortgages wouldn't move because they didn't want a 7% rate? Now it feels like the new normal, and for many, life changes matter more than the real estate interest rates. So how does this look in real neighborhoods? In Lee Summit, homes priced right are still going pending in 7 days, but in Blue Springs, the average is now over 20 days. That's a huge change from 2 years ago when nearly everything sold in under a week. Look back at history and the pattern is clear. In 2021, the supply was about a month and a half. At the beginning of 2023, it had dropped to just over 1 month. Then, this past July, it climbed to about 3 months, almost double what we had 2 years ago. The key thing to know is this wave of inventory is just the start, because it's already changing the balance between buyers and sellers. And when we look at bidding wars, you'll see exactly what I mean. But before we dive into this, go ahead and hit subscribe. Here, you'll get market data, neighborhood spotlights, and insider tips to help you make smart moves. And don't forget the notification bell so you never miss an update. One click keeps you ahead of this fast-changing market. So here's how Kansas City's market pace has flipped, and how buyers get back the negotiating power they haven't had in years. That's nothing like the frenzy we saw back in 2021 and 22. Remember when homes got 15 offers all over asking? When buyers had to skip inspections and pay over appraisal just to win? Those days are over. The data shows a complete shift in how buyers and sellers deal with each other. Average days on market climbed to 45 for existing homes. Back in 2022, homes were pending in only 3 to 5 days. Now, buyers have time to think, inspect, and negotiate. That's a luxury we haven't had in years. And what surprised me most in the data was the sale to list price ratio. It dropped to nearly 98%. That means buyers are paying about 2% below asking on average. 2 years ago, buyers had to go well over the asking price just to win bidding wars. Now they can actually negotiate. Multiple offers are down too. On the Missouri side, only 42% of homes sold over list price in recent months. 3 years ago, almost every single home got multiple offers. The bidding war era is over, and here's the best part for luxury buyers. The slowdown is the sharpest in the high end. Homes over $500,000 are sitting 40 to 60 days plus in premium spots like Leawood, Kansas. 2 years ago, those same homes sold in less than a week. Across the metro, average days on market hit 35. That's 9% higher than last year, and it may not sound like much, but in real estate terms, it's a game changer. It means buyers have their power back. During the peak bidding war years, homes often sold for more than list price. Buyers were desperate and competition was fierce. Now buyers can inspect, like I said, and negotiate terms like adults. It feels like a normal market again, and here's something that might surprise you. Leawood's premium homes can still move in 5 days when priced right, but that's the key phrase, priced right. Overpriced homes sit for weeks. Sellers can't just throw out a number and expect a fast sale anymore. You might be wondering what this means for your ability to negotiate. Buyers today have more control than they did at any time since 2019. They can ask for repairs, request for help with closing costs, and take their time making decisions. Sellers have to work with buyers instead of just choosing the highest offer. But with all this change in pace and power, you might assume prices are crashing. That's where the data gets surprising. The numbers show something else, and it goes against what many people believe about prices today. Prices here aren't doing what most people expect. Even with more houses available and a slower pace, the data shows a curious story about the market strength. Home prices are actually still rising, and the change is how they're rising. Growth is healthier now, not the wild spikes we saw about 3 or 4 years ago. The median home price is $250,000, up 1% from last year. That's steady growth, not just double-digit jumps that made homes unaffordable. And this is what healthy appreciation looks like. So what do these numbers mean for you? The average sale price reached $320,000, up 2.3% from last year. That shows the market still has demand, with prices moving up in a more balanced way. Existing homes are selling for a median of $325,000, which is 7.2% higher than last year. Buyers are still eager to purchase here. The demand is there, but the pace feels healthier now. And this steady growth looks even more impressive when you see how it ties to the $3 billion infrastructure projects that we'll cover later on. That project already sparked billions in downtown development and is now set to transform the Plaza corridor. But here's what caught my eye. New construction dropped for the first time in years. The median price is $525,000, down 3.7% from last year. Builders can't just raise prices anymore. They have to compete. Looking ahead, experts project about 6% appreciation next year. That's strong, sustainable growth. It builds wealth over time without the wild swings we saw during the pandemic. So how does Kansas City stack up against the rest of the country? The national median home price is $420,000. Kansas City sits at $250,000. That's about a 20% advantage and a big reason people are moving here. Remember those pandemic years when prices jumped 15 to 20% every year? That pace just wasn't sustainable and it pushed out many local families. Now we're back to normal growth rates that make sense for the long term. What surprised me most is the data. It's just the stability, but the stability isn't evenly spread across the metro. There's a major price divide going on and most people don't even realize it. It's creating very different market conditions depending on which side of the state line you're on. All right, we're looking at two completely different markets here. There's a surprising price gap between Kansas and Missouri suburb. This divide is shaping both challenges and opportunities depending on your budget and goals. The state line is more than just a border, and it plays a big role in where you should buy. In Johnson County, Kansas, the average home price is $450,000, up 1.8% from last year. Homes stay on the market about 50 days, and this is premium territory where buyers pay extra for top schools and newer neighborhoods. Cross the line into Missouri, and the story totally changes. Jackson County's average home price is $290,000, up 1.2% from last year, with nearly 40 days on market. For families who want space and quality without paying the Kansas premium, this is strong value. The gap is striking. Johnson County homes are 84% more expensive than similar homes across the state line. That's like paying $450,000 for a house you could get for $245,000 in Missouri. The real question is, are Kansas amenities worth that premium? Now, let's look north, where Platte County is emerging as a growth leader. The average home price is $490,000, up 3.3% from last year, with 40 days on market. The new KCI Airport and major development projects are fueling that demand. And this is where it gets interesting for buyers. On the Kansas side, premium areas are still very competitive and well-priced homes can draw multiple offers. In Missouri, the pace is a bit steadier and prices are lower, giving buyers more negotiating room. You can shop with less pressure and make smarter choices. Look closer at specific neighborhoods. In Overland Park, Kansas, homes go pending in 40 days with a median price of $639,000. Buyers there want the Johnson County lifestyle and will pay for it. Leawood, Kansas shows limited luxury inventory, with most new listings about $750,000 and a median above $400,000. That's the heart of Kansas City's high-end market, and it's still moving despite the slowdown. On the value side, Liberty, Missouri has a $325,000 median. It gives families more space and quality than urban areas without the Kansas premium. It's becoming a popular middle ground. And what most people don't know is that the new KCI Airport is driving Northland demand in ways that aren't obvious yet. Development and job growth near the airport are setting up long-term value. Smart investors are getting in early. But this geographic divide is only one piece of the puzzle. The future of Kansas City real estate will be shaped by something even bigger. 3 massive infrastructure projects most people aren't watching. And these projects will completely change which neighborhoods see the most growth over the next decade. Okay, these projects are creating new demand patterns that smart buyers are already watching. The first is the new KCI Airport, a $1 billion project already fueling growth in the Northland. Eastern Airlines moved operations here, and big logistics companies are building new distribution centers. Together, that's over $1.5 billion in yearly economic activity and more than 10,000 jobs. Most people drive right past the KCI 29 Logistics Park and Platte International Commerce Center without realizing they're pulling in billions of dollars in private investment. When major companies build logistics hubs, they need workers, and when those workers arrive, they need homes. The ripple effect is just starting, and that's why homes in areas like Liberty are still moving quickly, even with more inventory citywide. They're benefiting from the jobs and activity tied to the new airport. Next up is transportation. The KC streetcar extension is a $350 million project that adds 3.5 miles connecting downtown to the plaza. Along this route, developers are already building 1,400 plus new apartments and mixed-use projects. Think about it. The first streetcar sparked $4 billion in downtown development. This extension will do the same for Midtown and the plaza, and homes near that route are set to rise in value as the project nears completion. The third big one is the proposed downtown Royals Stadium. A $2 billion plan that could be a game changer. And whether it's built or not, the fact that it's even on the table shows that Kansas City's push to make downtown a regional destination is serious. These projects mean more jobs, more businesses, and more people moving in. More people mean more housing demand, and more demand pushes prices higher. It's simple economics, but most buyers don't connect the dots. So timing matters. Buying near these projects before they're done means that you pay today's prices but capture tomorrow's value. Places like Liberty, Gladstone, and northern Jackson County are all set to benefit. And here's the inside scoop. The airport area is turning into a new economic hub north of the river. This is all about logistics, distribution, and the thousands of jobs that come with global commerce. Buyers who are taking that position early, and the key thing that most people miss is that these projects are shaping more than today's market. They're building the foundation for what this city will look like in the next decade. Smart buyers are getting close to these growth drivers now. So that's it. Kansas City's market has reached a healthier balance. Inventory's up over 10%, bidding wars are slowing, prices are still rising, but at a steady pace. Big infrastructure projects are opening new growth paths across the metro. And this is what normal looks like. Buyers have more choices and room to negotiate. Sellers still see gains, just at reasonable rates, and people can make good decisions without panic. If you're thinking about a move to one of these KC suburbs, email me at Kelsea@lakewoodhomesandland.com. I'll look at your goals, timing, and your budget, then show you which neighborhoods fit your style best. Whether you're buying, selling, or investing, this shift creates real chances you don't want to miss out on. Wondering which areas are about to explode in value due to all these infrastructure projects? Click the video on your screen now. I'll show you where the work is happening, timelines, and which neighborhoods may benefit most. Tap to see the full map of KC's transformation. See you there.